And hello. Hello. Good morning, everybody. Today we are back for a Breaking FUD show. What's the goal? The goal is very simple. It's to just learn as much as possible in a limited time. I want to do this on a regular basis in the morning, just reading articles, providing some analysis on certain topics, and just replying to your questions related to fundamentals or even just currents. Market sentiment, how things are going, market trends, different products we can do and stuff. I'm mainly doing this for myself because I want to educate myself more. But I think it's also a great way to show how I work in general, like with my note taking and stuff. And yeah, so we'll see where this goes. I'll just do this regularly for a while, and then, we'll see if you guys like it or not. At the moment, I'm reading a lot of articles by Arthur Hayes. This guy is a legend, and I think his articles are really well put. So that's what we'll do today. Yesterday, I read the article Floaters. I think I will put up the YouTube video very soon, or it should be already up when you will see this one on YouTube. And today, I just want to go down these different articles and just read them one by one. And, learn and try to accumulate as much knowledge as possible. Okay, so maybe very quick BTC review. I think, so right now the macro sentiment is pretty bad. And BTC has kept dumping. Even though yesterday there was like a lot of bullish pressure, I believe, at the end of the day. It just got destroyed here on this little wick. A lot of volume, a lot of liquidations have been happening. So yeah, I don't know. I'm generally bearish. I'm in a hedge short position. So hedging means I'm spot long a lot of percentage of my account, and I'm short ×1 with the same size as my long. I'm basically covering my trade because I just want to lock in dollar value while being exposed to the market. And yeah, I will look to close this trade. Either if you're in this era, we retest here, and I see there's like a bullish retest, or if we really puke down to 14k. These are like the things I'm looking at right now. In the meantime, I'm not very rushed to do anything special in the market. I think it just kind of sucks, and it's not the right time yet to bet. So yeah, I think it's the right time to learn though, so that's what I will do. Okay. So the way it will work is relatively simple. The way it will work is relatively simple. I will just pull up the article here, shut it down, and I will use text-to-speech to listen to what the guy is saying, and then I'll take notes on my Notion page. And for now, my Notion page is private, but if it's something that's interesting to you guys, I can always open it up in the future. The goal is just to have like so much data at the end of the day that I will be able to use all that to create new content. out of it. So yeah, exactly, the first React channel in the cryptosphere. That's it. That's what I'm. Okay. Morning coffee, really important. And let's get it. Okay, cutting the music and let's go. Like this, like this. Okay, perfect. Wait, I'm opening my other dashboard so I can read your guys' comments easier later. Okay, shut it down. Let's go.
Shut it down. Any views expressed in the below are the personal views of the author and should not form the basis for making investment decisions, nor be construed as a recommendation or advice to engage in investment transactions. Come eat some of these member berries with me. Member when folks used to travel hours per day to plop their tush into a seat in a steel cage called an office. Member when traders used to congregate on a trading floor 5 days a week and shout at each other. Member when digins on the trading floor used to haze interns and fresh graduates. Member. I have regaled readers with many stories from my early years as an analyst in Deutsche Bank's Hong Kong office. It truly was a special place, filled with some of the most interesting and aggressive individuals I have ever met. Today we shall talk about a teammate of mine and fellow graduate classmate who, in my crew, went by the nickname Killa. Don't worry how or why she acquired said name, just know she is a gangsta. Killa and my team worked very closely together. She traded a variety of equity index swaps.
Wait, I need to get the... Oop. Sorry. Okay, so let's figure out what this is about.
Swaps. Her team worked quite late into the evening due to poor middle office tech, and the fact that they covered the India close from Hong Kong. Anyone who trades or traded Indian equities knows how much of a pain in the ass booking trades is. While I thankfully exited stage left circa 5:30 p.m. each day, when Singapore closed, Killa and her team routinely left the office later than 8 p.m. In pre-COVID Hong Kong, post-work jaunts into Lan Kwai Fong were the norm. One particular evening after work, Killa informed her team that she could eat 10 Big Macs in under 2 hours. There is nothing that excites the animal spirits of a trading floor like a good old-fashioned eating contest. Depending on the difficulty of the challenge, the whole street might drop what they are doing to gamble on the outcome.
These fucking traders, dude, they would like really bet on anything. I feel like. It just becomes a fucking addiction at some point. It's crazy.
Outcome. Sadly, as I am told by current bankster compadres, these sorts of activities are now forbidden by the woke-inity. But things were looser back then, and we couldn't let such a bold claim go unchallenged. The next day at work, we decided to put Killa's appetite to the test. In the morning, chatter began as to whether the alcohol had given her unwarranted confidence in her ability to consume Big Macs. She doubled down, and said she would show us. A palpable feeling of giddy excitement quickly spread across the trading floor and throughout the Hong Kong trading community at large. Bloomies lit up as clients and friends across the city started placing wagers on whether or not she could complete the challenge. An intern was tasked with procuring the victuals, and at 12 noon, the contest began. All activity on the floor ceased, and people crowded around her desk. Her strategy was sound. She separated the meat and bun, chowed down the patties first, and then finished off the bun and toppings separately. About 20 minutes into the event, one of the senior MDs walked over to the battlefield. I can imagine he probably had heart palpitations as he watched a junior female trader scarfing down burgers surrounded by a bunch of cheering dudes. It just wasn't a good look for the bank. And as the most senior person on the floor that day, he quickly and sternly shouted, "Shut it down." And that was the end of the spectacle. To this day, Killa maintains that she could have done it. The Fed believes it can eat Big Macs made of 50 bits per second rate hikes without the US and global economy violently vomiting.
Okay, that's interesting. So here, today's article, or this one's, it's not today, but it was set in June. So Arthur Hayes always like does this kind of story times and, you know, goes in tangents. But yeah, the theme today is rate hikes and how it impacts economy. Oh, sorry. Ça marche, ça fonctionne. Merci, toi aussi. Okay. I'm back. Sorry. So I was saying this article is about rate hikes. Rate hikes and how they affect a global economy. Okay, let's get it.
Vomiting. We are just a few minutes into the competition, and already risk asset markets are begging some senior politician to shut IT down. And everyone who owns risk assets globally is watching the Fed and its tolerance for pain. This pain is purely political. There are no easy outs when you combine the most levered domestic US and global economy in history, interest rates that are already at their lowest in recorded human history, the disruption of the world's largest energy and food exporters, Russia plus Ukraine, and inflation that was already at its highest in 40 years even. Before the Russia-Ukraine war. The real question. The bull market can only begin once the Fed and its sycophantic cadre of other central bankers reverse course, which at the very least requires pausing rate hikes and keeping the size of their balance sheets constant. The problem is that the average American worker bee is making increasingly less money month after month when adjusted for the government-measured rate of inflation CPI. Given it is a midterm election year in the US, this will become a bigger and bigger issue as we approach November. The ruling Democratic Party will need to do something to course correct, or many formerly elected folks will have to revisit what it's like to work a real job. Source, Bianco Research. Inflation becomes extremely important to voters when they work harder and harder for less and less.
Yeah, so here it's interesting because it talks about it talks about the link between ruling Democratic Party will need to do something and change policies, and which is interesting is that inflation matters when en français les Anglais et les Français vont te payer de la paix et de la visibilité. Mais je peux pas tag les deux, mec. Je peux pas tag les deux. Non, mais en anglais, il faut juste que je passe les 10 viewers, mec, et après ça va aller. C'est juste comme je suis giga petit, gros, c'est mort. Comme au restaurant, tu mets les gosses devant pour faire croire que c'est rempli. Non, 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 non. Non, non. On va rester sérieux. On va rester sérieux. Tu penses? Ah, c'est pas une mauvaise idée. Ouais, genre juste je me mets en... Juste je me mets en anglais. Ouais, attends. On va tester. Je vais faire en anglais, mais je vais parler... Ah mais non, je peux pas. Merde, je peux pas. Ah si, je peux. Attends, français. On va faire un tricks, mec. On va faire un tricks, gros. Bam. On va mettre en français. Ok, je me suis mis en français. Try maintenant. Ouais, je me suis mis en français. Est-ce que ça marche? Est-ce que ça m'a changé la langue? Ouais, normalement ça m'a changé la langue, ça va s'actualiser bientôt. Tags. Anglais. Tu parles anglais, faire ta vue. Non, mais en vrai, je peux traduire. Si c'est ce que les gens veulent. Hein. Ok, sorry. Okay, so the thing that's really interesting here is that basically what he's saying is that inflation matters on a political level. So basically what's interesting is the link between economy and politics is never really clear until the Fed needs to take political decisions in order to increase their voting percentages due to different policies that are not good for them. And so like this is the big change that plays a major role here. And that's I think pretty interesting. And that's mainly the main takeaway here is that if you are looking at macro political decisions, you can basically know at what point in the macro cycle you are. And right now you're in a really risk-off macro cycle, and you need to try to understand when the macro cycle might change course. So basically, basically what he's saying here is bull market can only begin once the Fed is sycophantic carrier of other central banks reverse course. So it's basically when they change their opinion because they want to, increase their value. Tu parles anglais? Pardon. So no, for this reaction Friday we'd like to put shouldn't be a problem. Okay, sorry. Let's keep reading the article.
Less money. Those red bars in the chart above mean trouble for whoever is in charge. For those of you who delight in consuming 24/7 politainment and can't hold a civil conversion with a member of the opposite party, if the Republican Party were the majority party they would face the same kind of inflation-adjusted whoop as currently spanking the Democrats. Source, Bianco Research. The median yearly income for Americans.
Yeah, so just look at this typical home values. Just look at this chart. It's pretty interesting. 12-month dollar value change, 12-month percentage change. So here you see like how little homes, like how what was like the index of funds the different homes had at different time periods. It's interesting theoretically because you have more money now, but you also have the inflation, so your buying power reduces. So it's like break-even kind of scenario where you're like winning on one front and losing on another one. So it's pretty interesting, I think. You see? Median yearly income for Americans is approximately 50K. 50K. This is crazy. You know you printed too much money when the median house appreciated more than the median income. Yeah. Yeah, because it basically means that the inflation rates outpace the value of your assets. Or of whatever you're earning.
For Americans is approximately $50,000. You know you've printed too much money when the median house appreciated more than the median income. That means you made more money sitting in your Lulu jammies than going to work, assuming you own a home.
Exactly.
Woe is the plebe that rents, NGMI. Inflation is enough of a problem that President Biden has explicitly tasked Jay Powell, the pro tempore head of the Fed, to deal with it. He is dealing with it, and it has made 2022 one of the worst years on record for financial asset investors. The Fed did such a good job crushing asset prices that the 2022 year-to-date return on the US 10-year Treasury is the worst since 1788. Booyakasha. I repeat, the reason inflation pisses off the electorate is that everyone moves from place to place and consumes calories. The average person cares deeply about the prices of fuel and food. Even though every central bank tries to hoodwink the populace into believing that fuel and food prices are not important yardsticks of inflation, we all take notice when these prices rise. Failure to tame this type of inflation has historically led to revolutions. The Fed believes that by destroying demand through the negative wealth effect, it can materially slow the rise of fuel and food prices. The theory is that rich people, and by that, I mean those who own financial assets, consume far more of these resources than their plebeian brothers and sisters.
Yeah, so this is basically the Ponzi scheme we live in, right? So what you're being told whenever you live is you need to work hard and then you can buy asset. Like this is like the entire investing theory that any richer person has been completely milking over the last decades. It's like they just acquired, like they worked. Hey Bjorn, how's it going, dude? Yeah, money industry. No, but it's not real. But I think this article is really interesting because basically it shows that if you have assets that are generating yield and the yield is more interesting than your income, that's already like a big problem in the system itself, right? And so this is what he describes here, right? You know, like the classic electorate is just consuming, they need to survive, while the people with assets win more with their assets. Paper money is a voucher. Yeah, exactly, for sure.
Sisters. Therefore, if you raise rates, it will crater the stock and bond markets, which will in turn force the rich to consume less, destroying fuel and food price inflation in the process. In a recent speech, Governor Waller said this: I support tightening policy by another 50 basis points for several meetings. In particular, I am not taking 50 basis point hikes off the table until I see inflation coming down closer to our 2% target. And, by the end of this year, I support having the policy rate at a level above neutral so that it is reducing demand for products and labor, bringing it more in line with supply and thus helping rein in inflation. That might work if the world weren't in the middle of a pseudo-world war. I say pseudo because the US and NATO are openly supplying sophisticated weapons to Ukraine in order for their armed forces to engage directly with Russia. While there is no direct kinetic confrontation between the West and Russia, the West is economically at war with Russia via various sanctions. Together, Russia and Ukraine produce a large amount of fuel and food.
Okay, so I have one guy who asked me to explain in French. En gros, ce qu'il dit, c'est que I'm just doing a quick explanation. En gros, ce qu'il dit, c'est que le principal problème du système actuel, c'est que si tu achètes des assets, c'est-à-dire par exemple des appartements, des maisons ou peu importe quel type d'assets, et que tu peux générer un yield, c'est-à-dire que tu génères un revenu passif avec cet asset, et que le revenu passif que tu as avec les différents assets te rapporte plus ou autant équivalent à ton job, ben en fait, il y a un problème dans le système économique de base, parce que ça veut dire que la personne qui va juste travailler sans acheter quelque chose va perdre plus que la personne qui va prendre un risque ou alors prendre un prêt et acheter un asset spécifique, gagner un yield passif et ensuite utiliser ce yield pour s'enrichir encore plus, etc. et couvrir en fait le taux d'inflation. Et en fait tout ça c'est littéralement le problème systémique dans lequel on est. Et en fait ce qu'il dit c'est que changer les BPS, donc ça peut avec les rate hikes, ça peut éventuellement stabiliser au fur et à mesure du temps, mais le problème, c'est qu'en fait, quand tu regardes à la macroéconomie, on est en guerre et tout, c'est une situation super chaude. Et en fait, c'est pas juste un changement de chiffre qui va stabiliser la situation parce qu'on est vraiment en crise, quoi. Is French your mother language? Yes, it is. French is my mother language. No, not really. French is my mother language. I've been born in Germany, so I talk German, French, and English. Yeah, hope you don't mind if I translate sometimes.
The longer this conflict drags on, the less access the rest of the world will have to these key resources. And the truly frightening aspect is that, when shut down, complex systems do not resume prior output in a linear fashion. We may lose a significant amount of global agricultural and energy output for decades due to the current disruptions. Making matters worse is the fact that Russia and Ukraine supply a significant chunk of the world's fertilizer, and without those exports, the agricultural yields of other countries will likely also plummet. And if Russia has to shut in oil and natural gas wells because it lacks a buyer who can logistically receive them, it will take decades to recover the current daily output. Listen to this very informative interview with Peter Zion. To fully understand the current precarious situation in the world vis-à-vis Russian plus Ukrainian fuel and food output, the Fed may continue to seek to destroy demand for fuel and food, but both will continue to rise in price unless full trade with Russia and Ukraine is resumed. While this is a dire situation, the US, the wealthiest country in the world, has an easy solution to this problem of inflation in the things we need. The US government can offer fuel and food subsidies, which would allow consumption of these essential items to remain constant at affordable prices. Subsidies come in various forms. Windfall profits taxes on price gouging private companies, price controls for various items, and checks sent directly from the government, aka food stamps, are all forms of potential subsidy.
Okay, I'll take this. Basically, it's giving like different examples how we could, how the US could eventually solve this issue.
Subsidies. How many politicians were against the COVID stimmy checks? How many politicians of any party could face their constituents and say, I want you to pay more money for gas and ground beef because I am concerned about the fiscal health of the country? Ain't gonna happen. To pay the subsidies, the government will need to generate more cash, which would necessitate the issuing of more treasury bonds, due to a widening fiscal deficit. But who will buy these bonds? In a wartime economy, the central bank loses its independence and merges with the treasury.
Okay. To issue subsidies, government needs more cash equals bonds. So this is equals bonds systems. But again, you need a buyer. War team, whoa, yeah. I mean, he's this guy is a sharp. So he's been the creator of BitMEX, and I'm reading the articles because I think he writes really well. He's pretty sharp. Like he has a pretty strong sense about what's happening. But yeah, I think it's interesting to see like how big of an impact even just this Ukrainian and Russian crisis has. If those are like the main suppliers of a specific domain, right? These are the main suppliers of food, and this is like destroying some form of the food chain, then you see how much it impacts everything else, and I think that's something we don't always think about, but it's interesting.
The Treasury. It happened in the aftermath of World War II, and it will happen again now. The Fed will press the button, and instantly start buying all of the debt the Treasury issues at a politically expedient rate of interest. Hello, yield curve control YCC. YCC equals $1 million Bitcoin. YCC equals $10,000 to $20,000 gold. The externality of this policy is the acceleration of global inflation and famine. The hardest hit will be the countries of the global south that do not have the ability to print money to solve their macroeconomic problems.
That's it, right? So for instance, with the COVID crash, what they did is they basically just levered up, and printed money and paid back all the debts by increasing inflation. And like that was like a short-term response. It's interesting to see like how fortunate these countries are that can just arbitrarily decide what happens. It's kind of crazy. So like inequalities between countries who can decide to just ramp up printing money to pay back all debt plus position themselves. And the third world country who can't / need to take the hit. Print sand. You don't want them to print sand, then it will just like plummet. The value will just plummet. But yeah, it would be good to pump. And I think, okay, I can't say, but I think sand will do pretty well. Not now, of course, but I think it will do pretty well. Okay, sorry.
Problems. The US issues the global reserve currency and has the strongest military, so it will be fine. It will get all the things it needs at the expense of everyone else. The EU bloc will be in a similar boat, because the euro is the second largest currency used in trade. The Europeans are experts at subsidies that distort demand and ensure domestic entities receive preferential treatment versus the rest of the world. But if the richest global citizens do not curb their consumption in the face of lower global output, it will be everyone else who starves. Before we get to this eventuality, which I bet will occur in the third quarter, the Fed must act tough. Even if the S&P 500 and Nasdaq 100 are below 3,000 and 10,000 respectively, the Fed cannot relent. Asset holders must feel like the ugliest duckling to ever be created. As the global financial markets melt down because of rising nominal interest rates, the Fed will look nervously at the backward-looking inflation statistics. If fuel and food inflation do not correct meaningfully, then it will be over to the politicians to offer subsidies to placate agitated voters. The subsidies will be paid for with printed money, which the Fed will happily provide. At that point, we will enter the mother of all risky asset bull markets. And if the omniscient hedge fund extraordinaire Felix Zulauf is to be believed, based on his most recent newsletter, what follows will be a once-in-a-generation financial market collapse a few short years later as fiat money self-implodes under the weight of the largest amount of money printing in human history.
Yeah. So this is what they're trying to avoid right now, right? And I think this is why the current macro situation is really important and people underestimate it. Is that it's like a way bigger crisis than people think. The system failed, yeah, but like any other currency. I think like the average length of any fiat currency is 20 years in an average. Like survival rate. So just think about it. We are like pretty much we are at a long time now. The euro exists for 20-25 years. The US dollar, I don't know how long it exists, but like since it got out of the gold standard, it's 70s, so it's 50 years old. Pretty old for a fiat currency, right? I mean, it's always the same thing. It's you know, when you have like an asset that's like based on collateral, because that's basically what the US dollar is. It's all a question of numbers, and you know, if you stretch it too much, then you take the hit later on. But yeah, very, very interesting. Basically levering up plus increasing systemic risk collapse possibility. Increases even more due to constant selling pressure, selling/printing pressure. It's like in any market. It's like in DeFi, for instance, those concepts of creating like artificial yield. In DeFi, what you're doing by creating artificial yield, you're just like creating bad debt for your protocol. And I mean, printing money in the case of the dollar is like very similar. You're just like creating more dollars, which means there is potentially more selling pressure on the market. and this means you need like people who will need to buy it to just cover the ecosystem, right? You're generating more bad debt, and of course, like dollar is bigger, so of course there's more utility, so people buy it more, or like need it more for your operations. But at the end of the day, it's like a very similar idea, right? And the risk is very similar.
In history. With this political backdrop, the resumption of the everything bubble is but a few quarters away. However, we are here now and must ask ourselves, is this the bottom of this current crypto bear market? Bottom fishing. Given that crypto is the last free market globally and will incorporate the resumption of risk on more quickly, how confident are we that the recent Terra USD/Luna inspired puke fest is the local low? Has crypto bottomed and brought forward the price of multiple additional Fed hikes to the present?
Okay, so here I need to put you guys a warning, because I like this article is a bit it's like early June. It's like on the 2nd of June this year that he sent it. I think this guy was saying basically that we were close to a bottom because of this like systemic collapse. And he was saying this while we were still around like 28k, 30k. So obviously like his position wasn't correct, I guess. But I think the analysis is still interesting. I just want to put it out there as a warning for you guys. Now Harmony is collapsing. Is it collapsing? Because they have been stealing. Is it really collapsing? Fuck, dude. Oh no, it's fine. It's still at 0.17. No, Harmony is a bit different. They got hacked, right? Harmony is not 100% the same thing. Harmony has begun a global manhunt for the criminal who stole 400 million. All exchanges have been notified. Law enforcement. I'm just pulling this up. Law enforcement, chain analysis, and chain AI have investigations to identify responsible actors and recover stolen assets. We are approving one final opportunity for the actor to return stolen assets with anonymity. Our final term is below. Return 10 million and restore. This is a good deal. This is a really good deal. He should take it. There's no backed stablecoin currently. It's a matter of time. But it all matters. It all depends on if they can recoup the funds, right? Because the dude has like 100 million of like criminal funds. So if he wants to legalize his funds, he should take this, honestly. Like 10 million is of white, like clean money, is way more valuable than 100 million of fraudulence. Can get fucked. This guy can get fucked. Reste souple. So yeah, so final term, retain 10 million and return the remaining stolen amounts. In exchange, Harmony will cease its investigation to the responsible actor. We are giving you until Monday, July 4th, okay, to initiate communication. To associate of the hacker, there is no honor amongst thieves. We are offering you 10 million for information leading to the return of stolen funds. Okay. To the criminal, White Hat Harmony 1. Sent us the last transaction of the primary wallet holding stolen funds as an additional effort to communicate. Our media material reflects the latest updates. Transaction idea. Okay, so basically, the hacker already got 50 million out through Tornado Cash. Yeah, but you know, like these amounts are so big that he can still be tracked, right? And Tornado Cash is like a transparent company. N'hésite pas à te redire des trucs pertinents en effet. En gros, Harmony s'est fait hack 100 millions sur leur bridge. Ça veut dire que tous les assets qui sont backés par le bridge, donc par exemple l'USDC natif à Harmony, etc., sont plus backés par les assets qu'ils avaient dans leur trésorerie. Ce qui signifie que tous les assets sur Harmony ont dépeg. Donc en gros, ils ont perdu leur taux d'échange. Tu peux plus redeem en gros un ETH pour un ETH sur Harmony. Et donc maintenant, en gros, ce qu'ils font, c'est ils proposent aux hackers de rendre, qui rendent les fonds et en échange, ils blanchissent 10 millions de l'argent volé. C'est leur dernière offre. He sent it to 1,000 wallets. Good luck finding 1,000 guys. Oh, he did? Okay. Yeah. Yeah, Björn, I agree, but like if they do investigations, they can track it down, and if the exchange cooperate, then he has no way to exit. It's like you will have, so the guy might have like 100 million in DeFi and anonymized, but he will always struggle to be able to exit it on the main exchange, because at some point he can get traced down and fucked, right? So it might not happen right now, but it can happen in a year or in 2 years. If they kind of figure out his identity, he can be like traced, similar to what happened with the Bitfinex hack. You see what I mean? They got traced now, and now they are going to prison for a couple of decades. So like I would think that it's in the best interest of the hacker to return the funds, but if he has like some kind of secret plan, he can like keep them. But I would say it's like he has the choice now to live as a criminal forever and like be traced his entire life, or to get 10 million, you know. It's 100 million hack, so they're offering 10%. It's really, really good. It's a good price for basically just having no fraudulent track record anymore. It's a very, very good price. I would say. Bitfinex hack, it was way more, I think. Bitfinex hack amount, it even got on Netflix. It was way more, 3.6 billion it was. 119,756 Bitcoin. It was way more. $3.6 billion. At the time when they stole it, it was worth 72 million. Here you can see. At the time stolen, it was worth 72 million, and now it's worth 3.6 billion. 100 million is horseshit to the FBI. Right, but you know, it's like current value. You know what I mean? Like if can 10x and then it becomes 1 billion. So it's like a similar hack. Very similar. It's just they held the assets for 6 years because they couldn't exit. They couldn't exit like. Anyways. So the real question, has crypto bottomed? And are we going to the moon? This is what we all want to know. So tell us, Arthur. Are we going to the moon or not?
The present. Should diamond-handed traders be stooping down to collect treasure? Please, faithful acolytes, follow me through the valley of darkness and let the chart porn presented set you free. The VC, Terra US.
Dude, I love his sentences. I will copy paste this. This is so good. Please, faithful acolytes, follow me through the valley of darkness and let the chart porn presented set you free. This is so great. This dude is amazing.
Terra USD connection. I want to connect two theories. Most tech VC shops are vehicles of expensive beta to the overall market when viewed against fee-adjusted performance. As a result, as inflation crushed bellwethers like Netflix because subscribers chose to eat rather than pay for the privilege of watching more mediocre Netflix originals, and some of the world's most successful tech companies, such as Facebook, saw flat to negative user growth, the general funding and IPO environment deteriorated rapidly in 1Q 2022. Add rising nominal rates to the equation, which mathematically destroys value in long-duration assets like unprofitable tech companies, and you can imagine the pain felt by the Patagonia, khaki-wearing bros in Silicon Valley, Dongguan in Beijing, and Mayfair. The following theory is from one of the smartest crypto traders, and frankly, humans, I know. I haven't done the work to verify his thesis, but logically, it makes sense. He postulates that the event that pricked the Terra USD bubble originated from VC shops that needed to cash out of their Luna positions with minimal market impact. Due to the public nature of the blockchain.
Yeah, I think this makes a lot of sense. It's what I said about what Dokon did as well, and what, for instance, Justin Sun created as well with his Tron ecosystem. It was just a really sneaky and cheap way to exit their risk asset positions, and then dump on the stable market while not being traced. And I think it's a really it's very potent. It's a very potent theory. So I just want to I'll take this as well. I'll take this. I like this kind of section.
The blockchain, early investors liquidating massive Luna positions would be easily spotted.
That's it.
The protocol allowed holders of Luna to tender $1 of Luna for 1 UST at the current Luna/UST market price. That Luna would be burned and an equal amount of UST would be created, with zero market impact on the broader Luna value. Using over-the-counter OTC trading desks, VCs swapped large amounts of UST for other stables like USDT, USDC, or even physical USDs. Voila! Now Luna profits are monetized with no market impact. The end result was a significant rise in the supply of UST, which eventually weighed on its price versus the USD. My boy estimates that close to $5 billion of these flows took place. The start to the Terra USD meltdown occurred when the peg broke slightly on curve. This happened as too much UST was supplied relative to other stables like USDT and USDC. Once the peg begins to break slightly, and confidence in a quick reversion wanes, the negative convexity of the algo stablecoin design takes over and creates an unstoppable downward force. Putting the two events together, the inflation-driven contraction of VC balance sheets and the...
So it was also the fault of Curve. This is interesting. Started with the combination of the unbalancing of the curve pair plus algorithmic system. So, which is interesting here is you see that the convexity of the algo was pushed and even strengthened by the system of DeFi with their pools. So it's like a double chain where if the pool if the pool is even more in favor of the other system, then the pool will even further unbalance. So what I want to say, sorry, I struggle to find the right words for this. What I want to say is that the unbalancing of the pool and the unpegging, they both go in the same directions that are negative for UST, because then people just want to cash out because they want to exit the risk of the impermanent loss in the DeFi position, and then they become forced sellers. And even if they, for instance, lever up on their DeFi position in the liquidity pools, it even forces them eventually out. So this is even strengthened with the unpegging, which is interesting by design, that both protocols therefore just helped the complete collapse even more. Is it deeping is dangerous at any rate? Yeah, 100%. Because basically, so what Curve is doing, Curve is the liquidity provider for stable coins, decentralized stable coins. That's what Curve is doing, and basically they want to they need stability, because their entire profit system is based on the market making and the fees and arbitrage they get from having equal pools for stablecoins. So like if Curve is at risk with UST because the balancing like switches, then like people will want to exit the position because they're basically like I think if the pool's unbalanced, then they're just losing on the trade. And this was also the problem that UST got, because UST wanted to become like the new forex for crypto, like the decentralized forex. That was like their entire sales pitch. And the idea of forex for crypto is that you like they wanted to do UST and then like Euro T or whatever, and like apply it to all the different currencies. And so I believe Convex had a lot of conviction in UST because their entire market theory, or like what the product they wanted to create, was like very would have benefited from UST a lot, like from the entire concept. So it was in their best interest to, combine both. Donc pour expliquer Pestos, on parle de Curve et de l'impact du DPEG de Luna Terra sur Curve. Et en fait, en gros, Curve, c'est un protocole qui crée de la liquidité pour les stablecoins décentralisés. En gros, c'est un espèce de forex pour les différents stables US dollar. Et en gros, le fait que le dollar a dépeg, ou en tout cas le fait que UST a dépeg, ça a créé une balance dans le liquidity pool. En gros, les liquidity pools, ça fonctionne sur des balances de 50%, 50%. Et si par exemple un des deux assets gagne plus de valeur que l'autre, ensuite ils sont rééquilibrés, et c'est ça qui crée l'impermanent loss. C'est-à-dire que quand le truc est rééquilibré, c'est là où des gens par exemple qui ont investi dans le pool, ils perdent théoriquement de l'argent. Et en fait, du coup, quand tu avais le depegging de UST, ça veut dire que le pourcentage de UST dans le pool a augmenté. Parce que donc il fallait plus d'UST pour compenser la valeur des USDC, ce qui fait que ce déséquilibrage en fait a créé encore avancé la spirale et a juste aidé au depegging de UST, parce qu'en fait il y avait tellement de pression de vente parce qu'ils devaient exit leur position parce qu'ils étaient à perte à cause de l'imbalance que c'était juste le début de la catastrophe, quoi. En gros. Okay, let's go further. One of the worst events in recent crypto history, I reckon. Yeah, for sure. It's like one of the worst by far. Had huge market impact. That's also why like 3AC got liquidated afterwards, because they were like completely levering up. So in yesterday's article, we saw that what the basically major funds in DeFi did is they bought risk assets like in form of DeFi. And oftentimes when you buy OTC or you buy like or you do like early allocations or investments, you are locking up your position, right? And so what they did to hedge against their lockups, because that means they got a lot of capital, they did like really big investments, but the investments were locked up. So this means they have no liquidity, they have no collateral, or like lower collateral. And so to cover their low collateral, they basically put all their money in UST and then they put it in Anchor, because then they could earn a lot of yield on their stable position. And that's like so crazy to think about, because basically they hedge against their risky position that were locked up, where covered by UST that was actually itself a massive risk asset, because the 20% protocol fees on Anchor was completely not sustainable. And so that's why like a lot of funds were completely wiped out, because they were thinking they were geniuses by levering up on all the protocols, making like super risky investments with super long lockups, and on the sideline they was use any remaining capital they have and put it in UST and earn 80% yield on this. But it means like actually their entire position, so 100% was at risk, and they had like low collateral to really exit. And when they were in anchor and they couldn't exit their entire position because the blockchain was turned down, then they were completely fucked and completely stuck because they had mostly hedge or like liquid capital they use for collateral that were stuck in there, and they could not do anything with it. And all the other capital they have were either in long-term lockups or like positions, or it was in risk assets such as BTC or ETH that was just going down because it was a bear market. So they were like losing on all fronts. And right now what's happening is they need to liquidate any position they have. So any open redemption, so like any lockup they will get on their positions over the next couple of years, they will need to insta liquidate or sell OTC to get instant liquidity and be able to repay the debts that they owe to different protocols and to law enforcers. So it's like a real tragedy, and I think a lot of projects that these guys invested in, they will have to go through massive selling pressure over the next few years just because of this lockup period and like the entire selling pressure that's like generated through this specific event. So yeah, just for a little context, that's what we saw yesterday as well. Mec, c'est tous les trucs pertinents, tu les expliques en FR, après on les cut, on fait une vidéo YouTube, on prend tes replays et cut. Ouais, en vrai, je peux faire, mais en fait, moi, ce que je voulais, c'est faire des trucs à part bien chiadés, tu vois. Je sais pas si faire le format stream, c'est le mieux. Je sais pas. Je sais pas si cut juste mes explications courtes, c'est ok. Hello, why are you sending your t.me? I will delete this, I'm sorry. How do I delete? Fuck, I don't know how to delete. Ouais, c'est cool. Juste pas dire de la merde. How do I delete the message? I'm retarded. Kappa. Banhammer. I need to time him out, I think. Hey, Little Legion. Hey, you were lurking. Let's go. Okay. I got it. Wait, il faut que je te mette mod. Pestos, crypto. T'es un modérateur maintenant, mec. Bah si c'est cool, mec, on peut faire ça, hein. Donc ce que je disais, pardon à sorry, I'll just translate 2 seconds what I just explained. Donc ce que je disais en fait, c'est ce qui est intéressant, ce qu'on a vu dans l'article aujourd'hui et hier, c'est que l'effet de... Pardon, j'ai perdu ma pensée. I lost my train of thought. Fuck. I forgot what I wanted to say. No. Oh no. I don't know. I don't remember. Watch me in English. Okay. Let's continue.
And the popping of the Luna bubble. My theory is that the broader risk-off environment crushed the animal spirits of VC punters and drove them to cash in on their successful Luna investments all around the same time. The global risk-off movement is of the Fed's making. Therefore, The Terra USD collapse was an indirect result
Scheiße.
of global central bank liquidity tightening. As such, I believe this event brought forward pain that would have occurred anyway months down the line as the Fed and others continued to tighten liquidity conditions. For the record, I'm not blaming the Fed for the collapse of Terra USD. Its collapse was preordained because of how it was programmed. That information was fully available to anyone who read the white paper and/or research the bleak history of algorithmic stablecoins. My point is that the Fed provided the catalyst for something that would have happened eventually anyway. And thankfully, due to the fact that there are no government bailouts in crypto, we found the real clearing price quickly, can now heal, and then resume the upward march to the altar of our Lord. Terra USD, like all central banks, is guilty of violating the Holy Trinity. Terra USD tried to pay a very high interest rate, 20% on Anchor, fix its price versus the UST to $1 peg, and have an elastic supply. UST supply could rise infinitely. This is akin to a central bank fixing the rate of interest, fixing its fiat currency's exchange versus the rest of the world, but having an open capital account. It doesn't work in TradFi, and it clearly doesn't work in DeFi either.
This is interesting. So basically they wanted to position themselves as like the complete rulers, but they were like pegging on USD, which is already an unstable asset, and like that was like suffering a lot because of inflation. And then they had an open capital account, which means everything was dependent on their assets and like their value add, which was Luna. And Luna basically reflected protocol fees, so, and like revenue generated, which was then reversed to USD, which is very scary. It's just like a failing system. I mean, we saw, but interesting.
Either. Crypto bottom metrics. I firmly believe that crypto leads the broader markets. The data supports this, as correlations broke down.
Non, en gros, ce que je dis, c'est que ce qui est intéressant aussi dans l'article, c'est qu'en fait, il montre que le principe même de Terra, en fait, c'était cette idée de yield à 20% sur Anchor, sur un stablecoin, qui en fait crée une dette négative pour tout le protocole. Mais en fait, le réel problème, c'est que non seulement ils avaient tout ce système de hot yield qui est super difficile à maintenir parce que tout est dépendant, en gros, des fees qu'ils génèrent dans l'entièreté du protocole. C'est-à-dire qu'il faut qu'il soit genre giga profitable, ce qui n'est pas forcément le cas. Et en plus, le concept de l'UST, c'est que c'était peg sur le dollar. Et en fait, le problème du dollar, c'est que déjà, en ce moment, le dollar était hyper instable. Et en fait, ça veut dire que non seulement tu te positionnes sur un asset qui est compliqué parce qu'il est full collatéralisé et à risque également. Ensuite, en plus de cet asset, tu crées un yield artificiel de 20%. Et en plus de ça, tu es dans une situation macro absolument terrible dans laquelle littéralement tout le marché était à risque. Et en fait, c'est ce que je disais tout à l'heure, c'est que ils avaient cover leur position avec du Bitcoin, qui est également un asset à risque. Donc, ils ont juste augmenté le leverage. Et le réel problème venait de tous les protocoles qui en fait utilisaient UST comme un hedge entre guillemets contre leurs investissements super risqués. Ou en gros, ce qu'ils faisaient, c'est qu'ils investissaient dans des protocoles DeFi ou alors ils achetaient des tokens en OTC. Ce qui veut dire qu'ils achetaient les tokens en dessous du market price, mais en échange, ils avaient des périodes de lock-up. Et en fait, les périodes de lock-up font qu'ils n'ont aucun capital liquide pendant X périodes. Par exemple, si tu achètes du Bitcoin en OTC ou n'importe quel asset DeFi, en échange de l'avoir à un prix plus bas que le prix du marché, tu vas fondamentalement tu vas pas avoir de liquidité instantanée pendant 1 an, 2 ans, 3 ans, 4 ans selon le projet. Ce qui veut dire qu'en gros, c'est ce qui s'est passé avec 3AC. Ils avaient énormément de capital dans ce genre de protocole DeFi avec des très longs lock-up. Ce qui veut dire qu'ils n'avaient pas de collatéral pour couvrir leur position. Et en fait, ce qu'ils ont fait en plus, c'est que le collatéral qu'ils avaient pour couvrir leur position, ils l'ont placé dans UST parce qu'en fait, ils voulaient choper les 20% en plus sur leur collatéral qui leur servait de hedge. Donc ça n'a aucun sens. Ça veut juste dire qu'en gros, ils ont augmenté le levier, ils ont augmenté le risque en gros sur toutes leurs positions. Parce qu'ils étaient tellement excités à l'idée de UST et Terra. Mais en fait, tout ce qu'ils ont fait, c'est vraiment se positionner comme des malades, quoi. Et ça, c'est sans parler de tout ce qu'ils ont fait après, où ils ont lever up sur la DeFi, ils ont lend tout leur truc. Donc en fait, ils ont vraiment, ils sont allés jusqu'au bout du bout de la boucle de DeFi pour essayer d'extraire le maximum de valeur, mais ça marchait pas, quoi. Ok, sorry. So let's keep going.
Between Bitcoin,
I just explained
Ether,
what
and
I
the
said
NASDAQ
in English
100
before.
during the recent crypto market meltdown. Below, let's revisit the correlation charts and look at how they all turned sharply lower. In successive order, the following are charts of the rolling 10, 30, and 90-day correlation between Bitcoin and the front-month NASDAQ 100 futures contract. In successive order, the following are charts of the rolling 10, 30, and 90-day correlation between Ether and the front-month NASDAQ 100 futures contract. As you can see, crypto decoupled from the broader risky asset universe during this recent sell-off. That is good at a macro level, but there are other crypto market indicators that also point toward a local low. Let's concentrate only on Bitcoin and Ether, as they are my crypto benchmark assets. Both of these cryptos are in a secular bull market. By this, I mean that Bitcoin and Ether versus the USD make higher lows each bull, bear cycle. The largest drawdown of each cycle is still higher than the all-time high of its preceding cycle. Bitcoin's major cycles. This is a great chart from Glassnode that helps
So this was a theory that was like invalidated, by the way. So this was invalidated now because BTC got below the all-time high. Just for context.
Me conceptualize the three major Bitcoin price cycles. A local bottom is reached at the largest drawdown versus the previous cycle's all-time high ATH. Below is a table representing the levels for the three major cycles. Ether's major cycles. Ether has experienced two cycles. The first one started when the coin first freely traded after eco distributions were made, and the second commenced after Ether bottomed following the 2017-2018 eco boom then bust. Don't take these levels as an exact science. There could be an exchange that traded at a higher or lower intraday level than what's observed on Glassnode. The point is to be generally correct, and with a bit of fudging around the edges we can approximate a range that corresponds to what we believe is the local bottom. For Bitcoin, that's $25,000 to $27,000. For Ether, that's $1,700 to $1,800. During this cycle, the secular bull market for now has held in both cases. And more importantly, the local low is quite close to the previous all-time high. That is encouraging because it means a sufficient amount of pain was felt by those who had to sell for one reason or another. The unfortunate part about markets is that most traders go big near the top, and must sell close to the bottom. If I had a natural language processor which ingested all articles about crypto features,
did Sandstorm have a booth at the NFT NY thing hosted by the Sandbox game? No, I don't think they had a booth, but they were there. But I don't think they had a booth, no.
featured in the mainstream financial press, I could chart a linguistic sentiment indicator. Maybe someone reading this has constructed said model and would be so kind as to share it with the broader community. Even without a robust model, cursory searches of clickbaity articles run by outlets such as Bloomberg, the Financial Times, the Wall Street Journal, etc. tell me that the editorial boards are gloating at the pain inflicted on crypto traders globally. See, I told you those JPEGs and cryptos were trash. Bitcoin is worthless, blah blah blah. DeFi heralds nothing but a new way to speculate, it's just a casino,
This is
yada
coming,
yada
guys.
yada. Isn't it great how much energy the world is saving because the crypto market cap is down 50%? I'm sure you have read something similar recently. When the market is topping out, the stories are about internet age Horatio Algers. When the market is bottoming, it's about how the repo man took Mr. Algers' Lambo so he could pay back loans he took out to run a carry trade on the Anchor protocol.
Let's go.
My bottom checklist. Bitcoin, Ether move increasingly in a less correlated fashion versus the NASDAQ 100. The current price levels are very close to the previous cycle's all-time highs. The mainstream financial media gloats about how stupid and greedy plebs were who attained short-lived wealth investing in crypto. 3 strikes, you're out. And now for the bonus round. During the meltdown of Terra USD, the Luna Foundation Guard LFG sold approximately 80,000 Bitcoin. They were forced to part ways with Lord Satoshi.
So basically, this was like his bull case back then, and this was invalidated, but this was like around 28k. I think what's important to take away here is that a lot of these fundamental situations still apply, right? I think we saw like between what happened with Terra, like what LFG had to lose, what's with Celsius, with 3AC, there has been so much liquidation and margin calls in general, and so basically a lot of forced sellers, right, on the market, that we need to be close to a situation or like at least a price point that's very interesting from an investment perspective. Because you think about it, you are at a position where people were forced to sell. This is like theoretically the place where you want to buy. So if you look at like the general level, we just made this massive move, right? If you just look at the chart, massive downtrends, and such a strong trend doesn't get reversed like in 2 seconds. I believe it is though very important to see that the trend will need to basically stabilize, like we saw here. It was like a bit more, it was a bit sharper, but this is like one general assumption you can take, where you can tell yourself, hey, okay, I've seen this strong trend. If I want to reverse, I will need to range a little bit in a specific era, or even if we bounce, and then at least like do some kind of formation, and then you have a reversal. So in any case, no matter what happens, whether we go down, whether we go up, whether we go sideways for a while, it will take time, and you will see price action, and of course there will be opportunities in this time. But don't expect this to be like the complete bottom, or to be like the perfect time to invest, right? I think like I'm not expecting any major moves in the next 2 years, and I believe we will trade like maybe between 40k, at most 50k, like between this and 9k at the very worst. I think this will be the range we'll be at in the 2 next years. And we'll just range in here. Maybe we'll range down, then we'll range up, we'll range here. Everybody will be bullish, think it's ATH, but there's no fundamental level, so we'll crash back down, etc. And so basically, this is what markets do, right? And then we'll recreate some kind of formation that's interesting. And then in 2024, when there's the new halving, when people have been building new protocols and improving the DeFi space for 3 years or 4 years, especially now we have way more actors, so it will be faster and faster. In 3-4 years, there will be the new wave of adoption, maybe new protocols that completely change the game or create like new adoption curves or like new real utility for the entire space. And that's when everybody is bullish. And that's when you will have paid attention to all this, have read up on all the protocols and stuff, you will have the pure alpha an advantage in the next cycle. And that's, I think, that's my personal plan. That's what I'm doing. I'm like currently in accumulating ETH mode. So yeah, I don't want to get too deep into like I don't want to give. I'm in no position to give any form of advice or whatever. But like that's what I do on a personal level. I'm just accumulating ETH. And what I will do is I will trade the different assets that outperform ETH on a short term level, and position myself for 23-24, where I'm aiming to have at least 100 ETH for the next cycle, and then I'm very good. And right now I'm at approximately I can't say, I won't say it, but basically, yeah. My aim is to be at 100 ETH until 2024 and just accumulate over time. And I think in 3 years this is clearly manageable. Whether it be through work, through trading, through NFT, through like whatever, and like slowly accumulate every month, and then whatever the price, I think we'll have a lot of good occasions. And then at the point where we'll have this new solid narrative and everybody will be bullish again, or there's a reason why we are bullish, because the space has really evolved. 2024, then we'll see new trends, and then you can position yourselves for the bull market with a very solid position, and then also ride the Ponzi's that will emerge on that time and play the bull market metagame. So yeah, that's my personal plan, but of course, do however you want. In the meantime, that's why I'm reading articles. That's why I'm like trying to improve my knowledge, my macro knowledge, my knowledge overall. I think it's like important to just gather as much data and knowledge as possible to then just crush it in the next cycle. I've been already performing pretty well this time, and just wanted to do better next time. Okie dokie. So let's finish.
Satoshi in order to defend the UST peg. The heretics always perish. While the transfers out of the LFG wallet are public knowledge, it is still unconfirmed whether the coins were actually sold.
I have no reason to doubt the veracity of LFG's public disclosures, so let's assume 80,000 Bitcoin was sold during the Terra USD meltdown.
At the bottom, a typically impervious strong hand can be forced to sell because of uneconomical arrangements festering in their trading books. The LFG is such a seller. To puke 80,000 physical Bitcoin is quite a feat. After contemplating the nature in which these Bitcoins were sold, I am even more confident that the $25,000, $27,000 zone for Bitcoin is this cycle's bottom. Choppa fellas. The politics must align with the macroeconomic environment to produce the catalyst for crypto to exit the current bear market. While the bottom is in, I hope, it doesn't mean prices will automatically resume a quick ascent towards $70,000 and $5,000 for Bitcoin and Ether respectively. The market will stage impressive bear market rallies that traders nursing massive losses will sell into. Right now, many traders are sitting on positions that are down 50% to 90%. These traders are in a loss reduction mindset. They want to exit at a less bad price. They are not mentally primed to ship more capital in at these bargain prices.
Yeah, this is interesting. So current market states. I like this phrase. Like sometimes I'm just taking some sentences the guy says because I think they're well put, well written. So currently traders are down 50-90%. These traders are in a loss reduction mindset equals they want to exit at a less bad price. So equals they are not mentally primed. I think that's really important to ship more capital in at these bargain prices.
Therefore, any rally will be sold into, until the underbrush in the forest is clear and the diamond-handed apes can emerge safely from hibernation. This choppy price action will eviscerate the capital of short-term traders who half-heartedly believe this is the bottom. These folks want to catch the knife and exit for a quick profit. But because they lack conviction in their position, they will get shook. And the market will quickly relieve them of their capital. This is why the politics and macroeconomic picture must coalesce before the crypto market can march meaningfully higher. Be patient, reduce the noise of the market, and focus on what matters. Accumulation. In 5 ducking digits. I laid out a thesis for why I believed Ether could hit $10,000 by year end. In light of the recent carnage, many readers wonder if I still believe in that target. In short, yes. However, because the resumption of the bull market is a political affair, I have less confidence in my timing estimate. My political theory rests on an assumption that the core tenets of inflation that American voters, or any citizen, for that matter, care about, fuel and food, will not materially soften as the Fed continues bashing a crowbar into the dome of risky asset markets. As a result, no one is going to be happy come election day. Those who hold financial assets feel poorer, and everyone still pays more and more to fill up their car and fridge. The baby boomers are the largest and wealthiest generation, as well as the most important voting bloc. They own a large percentage of global financial assets and are now embarking on retirement, which means subsisting on a fixed income. Poorly performing financial assets and rising fuel and food inflation are the two worst things a financial asset-heavy retiree can experience. The boomers will rage against the machine and set us free from the cage of tight central bank liquidity. The Fed will not be coy about its about face. The pivot will be clearly telegraphed, and those waiting for a signal that it's on like Donkey Kong will receive it. For patient traders whose time frame spans many years, it pays to wait. You don't want to sell filthy fiat and buy Bitcoin, Ether early only to get shook due to a lack of confidence in your investment thesis. It is better to wait for the all-clear signal from the high clergy of the devil that it is time to join the crusade. For those who must trade on a shorter day, week, month, or quarter time frame, good luck. Please affix a sturdy pair of depends upon your bottom, and prepare to babysit your Bitcoin.
Okay, this was a good article. What did you think, guys? We took a lot of time. Maybe I need to go faster with those, but I think it was a really good article. I'm not sure if we have time to do another one. Very nice. Yeah. I like this format a lot. I started experimenting with this. Do you like this kind of React thing? I think nobody does this in crypto. Thoughtful and direct. Yeah. I love his articles, and there are many. I did not read a lot of them. I want to read all of them. It's interesting also because he posts. There's a new one that will come today. He posts regularly. I think those are pretty much the best articles you can read. Aligned with those with Kobe's articles, maybe. And it goes back like to a long time, and I really want to listen to these just to. I think it's important for context to understand what was the mindset at different market stages and how the guy thinks. Like I believe if you learn from people who made it big, right, you will always become a better investor and trader. At least in my opinion. So the question is, do we do another one or not? I need to. Oh, by the way, big news, guys. You will see it in the next couple of days, but today I will be a speaker in a conference organized by a friend of mine. I'll talk about DAOs and DAO operations. I need to prepare what I'll say, but I'll take care of it this afternoon. I think it will be recorded, so I'll make sure to repost it on my Twitter. Maybe you can write one article related to how the builders will get impacted by the market and its deviations. This is a good idea. Wait, I'll write it down somewhere. How do I put it? Wait, I'll put it in my notes. Wait, I need a little paper. What exactly is interesting to you in terms of deviations? What exactly are you looking for? By the way, if you have any idea how I can help you guys, I'm always like looking for new ideas that I can do. I'm not sure if the SandFam spotlight and stuff is the best I can do for you guys, and so if you want something specific or you have any ideas, just let me know. I can adapt it relatively easily. So Sandstorm writes an article. Writes one article related to how the builders the builders will be impacted by the markets and its deviations. So I will tell you, though, I can give you a quick answer right now, and you make what you want out of it. I don't have like absolute knowledge or whatever. It's like my pure personal opinion. So this is also what we do at Sandstorm. We are basically connecting brands with builders, right? So there are two key things here. What kind of brands can we onboard in the markets? Like, who can we get as clients, right, for you guys? And how much do these guys charge us for this metaverse play, right? Or basically, how much capital are the different brands willing to allocate for to enter the metaverse? Those are like the two main questions, and I think those are the questions that are being impacted by the trends. So of course, if metaverse becomes a real thing and everybody wants in, then you have more demand and less supply. If you have more demand, less supply, the price goes up. So it means in a bull market, or at least in a metaverse bull market, where metaverse becomes a massive trend and it's like a big thing, then of course prices will go up. You will be able to sell builds for an unreal amount. I think the ones who made the most money were the ones that were established as builders in October or November, because it was like the massive hype cycle, and then everybody wanted it, or like wanted to build something, and that's where I think you could charge a shit ton. I think that's where you could charge a shit ton. Right now, as a builder, you will earn theoretically less, proportionally to the time you spend. But it's also the position where you are kind of you need to trust brands like Sandbox itself or Sandstorm that are really getting in contact with those legacy brands, because we are creating the price in the market. We are like creating the market. We are taking basically these Web2 brands' money and give it back partially to you guys in order to give you opportunities. So that's like the key aspect, right? And so if I wanted to be fully honest, if Sandbox didn't have this legacy brand strategy and we didn't have that strategy either, you guys would have very little work, because purely crypto native, nobody would want to invest in Sandbox right now. Are you guys actually getting them bags? Well, I can't give too much about this, but this is our active new strategy, and you will learn sooner than later who we are in contact with and who we managed to get with us. There's no market right now. Yeah, exactly. There's no market. There's no market purely in the NFT space. That's why I told you even months before. I said it in the beta chat, but I don't think enough people picked up. But I said back then, the real play is to learn how to be a flexible builder, make game maker experiences and vox edit, because the play is to sell experiences to people who are interested in making experiences. And if we are getting the people who want to enter the metaverse and at least allocate a little portion of their marketing strategy to new tech, and if they see Sandstorm as a way to spend less money for the metaverse experience, they will use Sandstorm and they will invest in our programs basically, and then we will give you jobs. So that's like our big play, and I can't share too much, but I think I've been relatively transparent on that front for a long time, and things are moving. Sandbox keeps enforcing the anti-UGC policy. Yeah, of course, because so Sandbox is in a tight spot because they need to have their numbers look good. If they talk to investors, they need to show them that things are happening, that there are like all these things. They need to give a prime to these brands. If you open up the market, there is no prime anymore. Like there's no gating. If there's no gating, then the companies will not be interesting to have a highlighted spot. So they are also in the spot where they need to play around with all the different levels. They need to play with their investors. They need to play with external new clients they want to acquire. And they need to play with their community to be able to basically level out the playing field. What they're doing is they're using most of their tokens, or like a big portion of their token allocation, and giving it to builders to kind of, keep the community going by paying them as much as they can. Which is why you see all those massive prices in game jams and vox edit contests and whatever, because they need the builders to stay, right? If you guys quit, they are done, they're finished. But yeah, the ideal thing they want, and of course they want to open up, but it will need another level of adoption, and that's like way too early still to get. Yeah, but not as much as they would invest in the sandbox game, but invest certain amount nonetheless. You mean for builders? I mean, okay, I will be. I don't know if you want my honest and harsh opinion, but what's like having builders create their own games and experiences has a limited interest to them, because they are benefiting from partners and from selling marketing and selling this metaverse play and technology to brands. If they open it up too much, they will be scared that there will be oversupply. It goes against them. Imagine how many builders would quit at a potential 10k BTC. I mean, look, I don't think you guys would quit if they double the rewards in their contests. You know what I mean? How many people would quit crypto in general? I mean, look, in the bear market, most people quit. That's just it. They will fund operations. They will fund their community. If they see that they are really losing people and that it's not growing, they will increase the pay rates. They will change strategy. They will aim for Roblox and Minecraft communities. They have a lot to do. I think they tried a Minecraft campaign that failed last couple of months. But yeah, of course builders will quit, and of course builders are already quitting. But what can they do? You know, if they open up the market right now, there will be no demand, no sales in any marketplace. The builders will come, they will create their works, post it on the marketplace, notice, oh fuck, I can get 0 sales on the marketplace. And then they're even more disappointed because all the things they were looking forward to doesn't work. And then they quit anyways. And now you have like all the disgusted builders because they are too early in the adoption curve. While what they are doing is they're waiting until the adoption curve is higher so that when interest is really there for those specific assets, then at least as a builder you can have the chance to get sales. That's what I'm saying. Right now there's little to no demand for the sandbox assets. Imagine at 10k or 9k BTC. Yeah, sure, but it doesn't matter, dude. Like, that's the thing. Sandbox, their products will be ready in 3-4 years. It's not ready now. Now it's just a marketing gig and onboarding brands. And you as a builder will have to grow inside this community for several years and learn how it works and you know, be better. And then once the thing really blows up and becomes the main metaverse and they open up everything and you have all the skills, then you will be able to make a shit ton of money. And in the meantime, you are dependent on brands like Sandstorm or Sandbox to get brands in order to get like custom builds made. Now is a sand printer M-Sand. Yeah, sure. Sure. It will dump a bit more as well, because there's like it will dump more because there are unlocks and, you know, investors that want to exit their position and stuff. I would say, so if you look, I made some technical analysis here. I think Sand, so I can see it on a bullish momentum. I think Sand will outperform the market. I can see it go to 3. In general, I would say bottom between 0.4 and yeah, like 0.4 is to me last level, maybe 0.2, but it's really low. 0.4 to 0.6 seems reasonable as a target. Maybe not now, but like longer term. Since they have like Alpha 3 coming and stuff like this, I expect it to pump with their announcements and stuff. Partners. Maybe go to 2 or 3. You can see all this pump. This pump was, for instance, NFT NYC. In general, I believe they're very good at conferences. So this is relatively bullish. They have a lot more conferences coming. With all their announcements, can be pretty cool. Anyways, not meaning to give financial advice, just like trying to give you guys a framework of understanding what it's about, what Sandbox is trying to build, what is their challenges, and why they're taking those decisions. Problem is, I know it hurts to hear, and it's difficult to understand. I've seen Project go to dust in these past weeks. I'm actually surprised how Sand is holding up until now. Yeah, they got famous people and shit. Yeah. I mean, look, you know, it's hard to say, but Sandbox right now is mostly a marketing company. Okay. I want to write that Sandstorm article. I mean, dude, you can ask Dom. We are looking for writers. We are also paying you guys for writing. So if you write well, just DM Dom. I don't know if you're a main writer. No, I don't think so. Don't remember your name. But yeah, I will not write this article because I'm too like in my position. So I'm doing like I'm explaining what I'm explaining here in my personal stream, but it's not something I would like explain on a public stream. You know what I mean? Can articulate it in a draft and send to you if you don't. Yeah, sure. I mean, I will DM Dom. We can do one-time gigs, I think. Should be no problem for an article. So yeah, just take what I explained with some grain of salt. I mean, right now I'm of course, you know, right now I'm overly bearish. I'm overly bearish right now. I don't see any positive reason why the market would recover. I don't see the rush either. I don't think. I want bullies to understand things might get ugly. Yeah, I mean, you know, we need to be brand friendly, and we need to check in. But you can write an article. I would read it. I will read it. I think it will be interesting. But I wouldn't be all doom and gloom either. You know, I think you also need to understand that everything that's happening here, even for Sand, you know, it's all. Everything is speculation, right? So this entire push to 8.5, it's like yeah, it's just a hype cycle. Maybe they're investing more time than they should or something like that. Well, I don't know, dude. You can argue, so you know, you can argue that if we are in a market where there is demand, where you are selling builds, where brands are interested in building stuff, where brands are interested in getting adopted, where brands really consider the metaverse as a marketing strategy, where the metaverse is a real thing that everybody knows about and everybody's kind of waiting, okay, how will this play out? You need to take that into consideration as well. You're in 2022. It's very, very early for the metaverse play. I think metaverse will be a thing in 4 or 5 years from now, when the tech is improved, when the metaverse hype cycle improves. At the end of the day, now it's just a video game with some community-made projects inside. 2030, yeah, 2030 maybe. But then think about it, how much time you have, right? And so then, you know, the people and the builders need to decide, do they want to work now in a speculative market where basically their demand and like their earnings will be dependent on speculation and adoption by other brands. So basically Sandbox and Sandstorm, we are the only ones who are doing this work. So are you basically trusting us that we can create a big enough market to cover you guys? Mainly you are like I'd say active in the community. There are between like 100 very active builders. If you stretch it, I'd say 200 to 500 builders, but like very active 100, I'd say approximately. So let's say you have 100 builders and the 100 builders get jobs that are paid, I don't know, with rates between 2K to 5K, 10K per month. I mean, you know, you can argue that's not a lot, but you can also argue, okay, but that's a real market, that's a real thing, and you know, you can sustain. Maybe it's better than your current job, and maybe you can get a prime situation when the market is not a little market anymore and it becomes way bigger. You know, then you will get a bigger market share because you were early, right? So I think it's like it all depends on your point of view and the situation. But yeah, do you really guys expect those numbers? Which numbers? For what? Dude, I can't say how much we are paying builders, but we are paying builders well. Sandstorm is the best paying brand. I can say with a lot of conviction. We're paying better than than concurrents and things like this. 2K salary for sure, of course. Even more. Dude, I don't think you realize Sandstorm is very profitable. We're a very profitable business. And we're giving back to the community, and we want to make more, but we need to. So what we did right now is we're basically building like some form of marketing empire, right? With a lot of shows, a lot of things that are happening, and then now the next step, and that's what we're doing, is we're working with Web2 brands and adopting them. Yeah, but make it like a common thing. I'm on the community, not only 50 of 100 guys. Dude, like we can't. So this is the thing as well. Like we're just think about it. Sandstorm exists since August, okay, of last year. At first, Sandstorm was a bi-weekly show. It was every 2 weeks, one interview in August. And they were like one person in the team. It was Steve. And it grew from one person and a bi-weekly show to an entire platform with 17K followers on Twitter. We are doing 5 shows a week. We have made a funding round. We have basically gotten all NFT projects existing on our platform. We have built one of the biggest builder communities, if not the biggest builder community, like 600 people. And we are now like since 1 or 2 months starting to switch strategy to go to Web2 brands because we have all this track record of work we did. Just messing with you, bro. Yeah, I know, but I'm just like trying to explain you, like you know, it's like a slow process. You don't have a lot of brands who scale up from 1 employee to 15 in 6 months, right? So just keep that in mind. Man, thank you for watching. I hope you liked it, and I will do it more. Anyways, does anyone else have a question? I think I need to close because I need to work as well for this evening's conference. Any questions? Quelqu'un a une question encore? But yeah, very good article. I think if we do 1 article daily, it will be pretty cool. Okay. Seems like you don't. So take care. I hope you enjoyed the stream. I hope you enjoyed the content. Very interesting article. And looking forward to this one. Purely about Luna. Tomorrow. Tomorrow is a Friday. Yeah, tomorrow morning. Okay. Take care, guys. Bye-bye.